What's going on YouTube? This is Jamil Basket and I'm back with another video. YouTube, a lot of people have been asking me, Jamil, what are you going to do with your investments? I've been seeing the stock market go up and down. Today is down over 800 points after rallying its highest gain in history. So Jamil, what are you going to do? And I've given a few people a few tips, but I want to share these tips with you all. So the first thing is I'm investing for the long term. I'm not investing for the short term here, guys. If you invest for the short term, then you will definitely be impacted by the stock market. Think about it like this. If you invest in a stock share at $33 and then that stock goes down to $28 and then you sell that stock, you're not giving yourself enough time for that stock to recover. So if you invest for the long term, yes, there are going to be ebbs and flows. However, you'll be able to recoup that money. Now, the S&P 500 has showed that over a 20-year period, it has not given a negative return. So when you put that into perspective, you want to make sure that you invest for the long term. Now, for my people out there that's getting ready to retire, you want to make sure that you contact your financial advisors so that you are pretty much shielded from any stock market volatility. People who are looking to invest 20 years and out, they should be able to handle the ebbs and flows in the stock market. But if you're about to retire, you want to make sure that you contact your financial advisor and find the best investment strategy as you go into retirement. All right. The second thing that you want to do is invest consistently. So there's a term called dollar cost average. And that basically means if you continue to invest, no matter if the stock market goes up, stock market goes down, you're able to weather the storm when you do have a real bad day or a bad week or a bad year. Being that you're able to continue to buy stocks at a very low price sometimes and sometimes at a very high price, but over a 20-year period, those dollar cost averages should pretty much average out. So that's one thing you want to do. You don't want to stop investing. Keep investing. Don't panic. Keep investing, and over time you will see your investments grow. The third thing that you want to do is have a 3 to 6 months emergency fund. So you want to make sure that you're not putting all of your eggs in one basket, hoping that the stock market never goes down. You want to make sure that you have 3 to 6 months saved so that you can weather the storm and not panic. By having the 3 to 6 months worth of income, you don't have to worry about drawing any of the money out to pay for, a car note or a hospital bill. You should be able to, pay for a car repair if you have that. So it's very, very important to keep at least 3 to 6 months of income. So you don't even have to worry about what the stock market does. You may check your account, in about, every other month, and you may see it up one time, you may see it down one time, but overall, have that 3 to 6 months income so you don't even have to worry about how volatile the stock market is. And then the last thing you want to do is make sure that your portfolio of investments is diversified. So again, like I said earlier, you don't want to put all of your investments in all of your money in one investment. You want to make sure that you have some in stocks, some in bonds, some in treasuries, some in real estate, some investing in yourself. So those are a few things that you can do to weather the storm today. Tomorrow, the stock market may go down, but don't panic. Continue to stay the course, continue investing, and I guarantee you that over, a long period of time, whether it be 20 years, 30 years, 40 years, you will see the fruits of your labor. You will see your army of your dollar bills working for you. So if you have any questions, leave a comment below. Like the video, and I'll be back with another one.